is run by a bunch of investment bankers, and Morningstar's modus operandi.
For Morningstar, I'm Jeremy Glazer. General Electric reported first quarter results that were roughly in line with our expectations. I'm here with analyst Daniel Holland to talk about the quarter and to see what the future holds for GE. Daniel, thanks for joining me.
Thanks for having me, Jeremy.
So anything in this quarter that kind of stood out to you as particularly interesting?
I guess it's more, the same drumbeat, that the company's had. Industrials still continues to plod along through the recession. Orders are starting to improve. Healthcare is improving as well. And, you start to see that industrials is shaping itself up into a nice core infrastructure type company. On the other side, I guess the one thing that interests me is that, GE Capital posted a pre-tax profit for the quarter, and it's the first time in a number of quarters that the segment's been able to do that. In addition, you're starting to see pre-tax, pre-provision income starting to continue to move upwards, which is a really good sign given that the company's asset base is shrinking at the same time.
So what's that mean for profitability?
Profitability for GE Capital is going up. You're starting to see lower provisions, which automatically just keeps pushing earnings back up for the segment, and eventually will help GE Capital maybe return its dividend to the parent company probably by 2012 or so.
So looking forward to the rest of 2010, where do you see some of the opportunities for GER?
The opportunities within GE's industrial business, as a recovery continues to take hold, you're going to see more energy demand or demand for electricity, and that really gives a big boost to GE's energy platform, selling more gas turbines, steam turbines, wind turbines, things that just generate electricity. At the same time, with the cloud of healthcare reform kind of past us, irrespective of whether or not what the impact might be to business, just the removal of uncertainty kind of helps people make decisions about what to buy in the healthcare space. And so that really actually helps healthcare a fair amount. And so you're looking at some pretty good news or positive events going forward for GE's industrial segment.
What scares you most about the prospects for the business?
The one thing that kind of keeps me held back is just the exposure to commercial real estate on the capital side. The one thing that didn't really happen in the core that I thought might have taken place is the company just continued to reduce its exposure to commercial real estate. And really the portfolio stayed essentially flat in the quarter, which, I would have expected to see more asset sales. And to me that signifies that, the market's still pretty tight and pricing isn't where the company wants to actually execute a transaction. Meaning that the company is going to have to continue to slug through more losses in commercial real estate until that market improves.
Speaking of sales, GE has a lot of planned divestitures over the next year. What do you think they're going to do with all of that cash?
Well, the company has alluded to a raising the dividend here in probably in 2011, which I think is excellent for shareholders given that the company slashed it last year. By the end of this year, they're going to have probably over $25 billion of cash on hand, which is over $2.50 a share. You raise the dividends in line with earnings, and you see the potential for both accretion through a buyback and a dividend raise. And so, the company has a lot of different options to deploy capital. And right now, I just don't see acquisitions being a really big part of it since there aren't many gaping holes in GE's industrial portfolio.
And finally, what do you think about the valuation of the shares right now?
Right now, GE shares, they've risen up a fair amount over the last couple of weeks here. Our fair value estimate's $25 a share, and so I still think that there's room for the company shares to improve. So I think that they're still relatively cheap, but it is a 3-star stock at this point.
All right, Daniel, thanks for talking with me today.
Thanks for having me.
For Morningstar.com, I'm Jeremy Glazer.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.